You've probably felt this before. You're scrolling through the news and suddenly you see a headline that says something like, "New retirement taxes are coming, Roth accounts are being restricted, Social Security cuts are inevitable." And for a moment, your stomach tightens. Because even if you've done everything right, saved responsibly, worked consistently, planned carefully, there's this quiet thought that creeps in. Did I miss something important? This is what I call the headline trap. It's when emotional, click-driven news creates anxiety, even when nothing meaningful has actually changed. And instead of guessing, I decided to go straight to the source. I spent over 40 hours reading through the official IRS updates, the full Secure 2.0 implementation documents for 2026, and the supporting policy notes, line by line, so you don't have to. And what I found was surprisingly calm. Because when you read the actual rules, most of the scary headlines aren't real laws at all. They're misunderstandings, half-truths, or outdated proposals that never became official. Once you see that, a lot of the anxiety disappears. If retirement planning ever feels confusing, heavy, or emotionally draining, that's not a failure on your part. It's a communication problem. And once you recognize that, everything starts to make sense. Here's the simple truth. Most financial headlines are not designed to educate. They're designed to capture attention, which means calm clarity often loses to emotional urgency. So small technical updates become retirement chaos, minor adjustments become government crackdowns, and cautious planning turns into fear-based decision-making. Let me tell you about Mark. Mark is 58. He earns about $120,000 a year. He's been steadily contributing to his 401k and feels pretty good about his progress. One morning, he reads a headline that says, "The IRS just killed traditional catch-up contributions." His first reaction wasn't curiosity, it was panic. He thought, what's the point of saving more if the rules keep changing? So he almost stopped contributing altogether. But when we walked through the actual rule, calmly and slowly, something interesting happened. He realized the headline left out most of the context. The change only affects higher earners, and even then, it doesn't eliminate contributions. It simply changes where the money goes, from pre-tax to Roth. Same saving behavior, same discipline, same long-term impact, just a different tax bucket. In other words, nothing meaningful changed for him. And that's the real story behind most of the scary retirement headlines. Take the so-called Roth catch-up mandate. If your income is below the high threshold, nothing changes. If it's above, your contributions still happen, they just go into a Roth account instead. That's not punishment, that's not restriction, it's a technical adjustment. And for many people, it actually creates more long-term flexibility. Now let's talk about Social Security. You may have heard benefits are being slashed, but what's actually happening is a routine cost of living adjustment. The real planning challenge isn't cuts, it's understanding how benefits interact with earned income if you're still working. That's not a crisis, that's a planning detail. With awareness and calm strategy, it becomes manageable. Then there are contribution limit increases. Yes, the numbers went up, but that doesn't mean you suddenly need to max everything out. For most households, balance matters more than volume. Cash flow, healthcare costs, taxes, flexibility. In retirement planning, efficiency almost always beats aggression. And finally, the wealth tax rumors. There is no new wealth tax law in effect. What exists is ongoing political discussion as current tax rules approach expiration. Important to watch? Yes. Worth panicking over? No. In fact, periods of uncertainty often create planning opportunities for those who stay calm enough to see them. So instead of reacting emotionally, here are 3 gentle ideas worth considering. First, review your plan once a year, not obsessively, just intentionally. Second, aim for tax balance, not tax elimination. Smoother taxes over time often lead to better long-term outcomes. And finally, question emotional headlines. If it sounds alarming, it probably lacks context. If calm explanations like this help you feel more grounded and confident, you'll probably enjoy the rest of the channel. New videos come out each week, always focused on clarity, not fear. Retirement planning doesn't have to feel overwhelming. When you filter out the noise, the rules become simpler, the path becomes clearer, and the anxiety starts to fade. You don't need perfect predictions, you just need calm understanding. And you've got this. Thanks for watching.